Welcome back to Primary Source China Investment. This is show I. People are asking, what are we going to do after we get to Z? Well, maybe you'll let us know what we're going to do and we'll implement that. So today we're talking a little bit less data-driven and a little bit more conversational about misinformation. How can people on the ground in China get information from the West and from the rest of the world, and how people in the rest of the world get information about China. On an earlier episode, peng.guo mentioned something very important. He said there's a misinformation and that people profit off of this information. And I thought that was a great point. So I wanted to open it up today with peng.guo telling us why he made that point and why he has that observation.
I think in current society, people really rely on the piece of the information. And so they read the news, they read the cell phone, not like pretty much not read the book. So it's hard for them to systematically to understand some of the things. And most of the time, it's a piece of the information. And the news is everywhere. So it's easy to get overwhelming. And if some of them could become like the mainstream, most of the time, people just take it. That's it.
Yeah, I do think while information is everywhere, real news is more and more difficult to come by. So just briefly, how do people on the ground in China get information about the rest of the world? Well, it's state-sponsored media. So Xinhua, People's Daily, these are state-run media, and it's very difficult to deviate from the Communist Party's narrative. And if you do deviate from that, it will quickly get censored. That's online, and that's also in traditional media as well. So there's a problem with the free media in China. Now, on the flip side of that, how do foreigners get information about China? Well, largely from those same sources because they produce content in English as well. So that content in English is a very limited source of information. Now, there are great publications, South China Morning Post, that come out of Hong Kong. However, with the passage of the new legislation, it's getting more and more difficult to get information out of Hong Kong because China has threatened to censor Hong Kong as well. So they have an information chokehold on what gets published. Remember last year, the US expelled or didn't renew some visas from the China media companies. And that was in direct response to Bloomberg, CNN, BBC, journalists getting their visas denied on the mainland. So when you have information and journalists that can't publish, you're going to be in an information deficit. And what we have right now is a huge information deficit.
I think, yeah, from what you said, I think it's also a little bit kind of the misunderstanding. Firstly, like the Xinhua or like the state-owned news agency that really represent the country level. And for the daily life is right now, as I know, in China, they're really very efficient to get all kinds of the news. For example, like a cell phone medium or something like that, if like the financial or market related news, right. Just to find the right channel to do it.
Yeah, but none of that's controversial. I mean, the list of blocked websites in China is immense. We're talking New York Times, Bloomberg, Reuters, and on. Never mind social media like Facebook, Google, Twitter, YouTube, all blocked in China. So yeah, you can get your source of information. And if you're sophisticated, you get a VPN and you go around that. But most people are not going to put in the trouble to get that information.
That's right. So I think that's the current situation. But some of the, both of people, they pretty much just care China-related news. If anything big or anything important, you will see it's easily get published or transferred from the your friend network. For example, like the Weixin or something. Right. Yeah. Right. I think for the Western and some of the articles, they probably is hard to hit the right point in the China society. In my opinion, people know the problem. They know what exactly caused the problem. They know this one everywhere. They have many different ways to find many funny ways to raise the questions. And the problem is hard to solve those social problems. From government perspective, it looks like government is resolve the problem every day. Like the real estate price is too high. That's a lot of daily work, I think, already occupies people's problem. Chinese people may concern like the Western news, they just simply attack or criticize things, the problem they know. That's pretty much we see that.
Yeah, that's the biggest problem. The discussion around the facts or the news lacks nuance. I mean, these big issues, Xinjiang, Tibet, these are massive issues, and there's a nuanced story there. There absolutely is. But because these terms are banned in China, and in the US, people have some position that they want to reinforce, this decreases the amount of dialogue that we can have around these issues. It's not so much what you say, it's how you say it. And that's the nuance that's absolutely missing on a geopolitical level between the US and China.
That's right. It's more like from the political perspective, they really need to reach some agreement how to effectively communicate. It's not really attack some other side on purpose or to doing that. So, and the people cannot ignore such kind of the need from the other side.
You mentioned earlier that Weixin is just the way everybody shares news. It's more like bottom up instead of top down. I wanted to ask your opinion about just recently at the Oscars, Chloe Zhao, a groundbreaking director and now Oscar winner, when she did her acceptance speech, which was a great acceptance speech, it was blacked out in China. So nobody saw that acceptance speech. Now, I'm sure it was repeated later. At the time it was broadcast, the government felt compelled to block it out because Chloe Zhao said something in 2013 about her childhood on the mainland. And to me, that's a sign of weakness, not a sign of strength.
Firstly, truth has its own power. This is also show that it's hard to balance what's the really they try to block some fake news versus block some of the just the normal things.
Well, we're certainly not going to solve this problem today, but peng.guo and I are out here trying to make a small dent in the information vacuum and the disinformation campaign that goes on. So please join us every week. And next up, we're going to talk capital markets. So today on capital markets, we're talking about bond defaults. And generally speaking, bond defaults are a bad thing, except when you have an orderly redistribution of the defaulted notes. And what's happened in China in the past is an extreme case of moral hazard. Investors would buy a bond, generally the riskiest bond, understanding that the government would bail them out if there was a default. Now, that's a horrible investment thesis, but that was the case up until a few years ago. And now we're seeing the first stage, which is, oh, the government's going to bail us out. Now we're in the second stage, which is we hope the government is going to bail us out. And we're actually going to move to the third stage, which is if a company goes bankrupt, the equity holders get killed first, and the bondholders hopefully get their bait back. And Huarong, which is a large state-run restructuring bank, is a big example of this. When Huarong missed payments, that's code for default. So who's going to get paid back and when are they going to get paid back? Generally speaking, we're still in an environment where if a large SOE, state-owned enterprise, goes bankrupt, we're going to look to cobble together another state-run enterprise in order to make it whole. Our viewers are familiar with Ping An. We talked about them last week, the number 2 stock in the CSI 300. Ping An is in the middle of a big restructuring right now. So a company called Founder, which was Beijing University Founder Group, defaulted on about $3 billion and 34 billion of renminbi bonds last year. It gets very complicated because Ping An is going to step in and make those bondholders whole and then take a majority piece in Founder. Well, Founder has a securities firm with a joint venture with Credit Suisse, and now Ping An wants to fold that into the fray as well. But this is again an example of the first case, which is large SOE goes bankrupt or misses payments, another large SOE steps in. So these are the big names that get all the headlines, but a lot of smaller names have gone bankrupt. And our listeners will remember that property is the cause and solution to most of the problems. So real estate firms made up 27% of last year's 15 billion of missed payments. on offshore and onshore bonds. And this compares to 30 billion in all of 2020. So that's a huge uptick. And these property companies are the smaller ones generally that don't get bailed out. They do hold the asset, which is the land, and then some other developer will come in. But these are the real defaults that are happening on the ground, and they're not getting quote unquote bailed out. Somebody else is stepping in, but bondholders may get ticked. One final point about the size of the debt. According to JP Morgan, last year's increase in credit growth, measured as debt to GDP, was 281%. That's the highest level on record. And China's not alone. Indebtedness around the globe has really spiked. But Chinese policymakers are more concerned that most of the resulting debt burden will fall on individual owners, not fall onto the SOEs. So this is this transition between, hey, government's going to bail us out, or large SOE is going to bail us out, all the way to the market is going to make sure that there's an orderly transfer. And the pecking order is a little bit different. So who gets paid first? A lot of times in these bankruptcies, employees will get paid first. So who gets paid first is not necessarily the bondholders. And there are a lot of claims on a bankruptcy.
Bond market has changed. Like Jerry said, there's a default rate getting increased, which is a good thing for the bond market. So I totally agree. It's a really that the market exposure the big companies' potential risk. I think it's a good way to improve the whoever want to invest in China need to improve the credit analysis process. Probably is for the right now we see more and more state-owned companies get a default or get some kind of a default. It's really reflect the big change in China in the structure. So they really push the capital chain to the limit. So that is easily to cause the big impact to the risk. So why we do why the people want to do the fixed income analysis, we maybe can help out guide them more ways to think differently and find the useful, reliable source or data to improve the credit analysis process.
Yeah, so I think historically credit analysis was, let me grab the highest yielding bonds, buy those bonds, knowing full well that if they default, I'm going to be made whole anyway. So that's the moral hazard we talked about in the outset here.
Actually in China, it's very, very hard to broken the guarantee payment for the bond. Even in the like the P2P, we know this is the cause of a huge problem in China society. That's because of the guaranteed payment. As long as they cannot support it, that means that they out broke. This is like the bond. So that is really need to increase the default and build the right model to predict the default rate.
Yeah, the P2P business basically collapsed in China. I mean, there was a lot of bloodshed. Well, we're going to leave it here this week. Thanks for tuning in. As usual, click the subscribe button. Every Monday, we drop a new video. Hope you're enjoying it. Let us know in the feedback and reach out to us if you have any other questions. Thanks again for joining us on Primary Source China Investment.
Great. Thank you.